All right, so we're going to have a look at the Needs Analysis. Just to note, the needs analysis methodology that we use makes certain assumptions about the future, which you can read our complete methodology document at the end of the needs analysis. You'll be able to download that and read those calculations from there. So just getting started, our client details have been brought in from OmniLife, and you can adjust or make changes there if needed. So then we'll move on to general details. So you'll be filling in your client details and then choosing the cover types and your rates of assumption. So our needs analysis tool considers 4 areas of a client's financial situation to calculate their needs. Those are assets, liabilities, expenses, and income. And many of the calculations in the needs analysis depend on future cash flows. And these are discounted to the present day value using the investment rate and the inflation rate that you will supply here. So OmniLife defaults the calculator to an inflation rate of 2.5% per annum and the investment rate of 3% per annum, which is consistent with the ASIC Money Smart instrument from 1 June 2022, but you can change this rate at your discretion. Looking at the ongoing income and expenses, so if you want to consider future cash flow for the client, you must click yes here at this section. Otherwise, this ongoing expenses calculator won't be available to you later in the tool. And then you can also include existing insurance for your client if they hold any existing insurance, and then whether or not that insurance will be retained. You can also add other secondary options if your client holds, multiple insurances at the same time there. Any existing insurance that is being retained by your client will be offset against the calculated insurance requirements. If it's not being retained, it will have no impact on the final recommendation of the new sum insured. Coming under assets, you'll add in the amounts for your client and what event they would become available to liquidate. So OmniLife, our needs analysis assumes that what we call your cash and equivalents will be liquidated in all of the selected events. So those you're not able to change those. However, down under the assets to be liquidated, you can add and adjust and customize per event for those different assets based on your client scenario. The cash and equivalent assets at the top will directly decrease all relevant insurance needs by the entered amount. Moving now to the liabilities category. So these are where you're entering your client's debts. We have the most common ones already listed by default, and you can adjust the percentages the client would like those to be paid off in the different insured events. The percentages assigned to each liability and insurable event will be used by the tool to determine the proportion of the value to be included in the calculation for required insurance cover. And as well, you can always add and adjust and customize different liabilities added based on your client's needs and scenario. Coming now to the expenses. So these are your extra one-off payout events here at the top. So the one-time expenses that the client will need to have covered in the event of injury or death. And these will result in an increase in the required level of insurance for each of the cover types they're related to. So your funeral expense here will relate to your life insurance total. Then under ongoing expenses, so if you selected yes on the general details page, you'll have the option here to add in ongoing expenses for cash flow for your client. Again, you can add, customize, adjust all the different levels there based on your client's needs for continued cash flow. When entering the ongoing or recurring expenses the client will need to have covered in the event of injury or death, just note that this will result in an increase in the required level of insurance. So these ongoing expenses form an annuity that is brought to present day values And that's using the net interest rate and inflation rate that you had entered before, or the default rates that the tool assumes. Now to the income. So you'll choose here, the client's income should have been pulled through from OmniLife if you had added that in. Then choose the replacement ratio, super contribution, waiting period, benefit period for the client. And then you're able to add in other income sources that would continue for the client. And these have the, again, adjustable percentages for each insurance event to offset the benefit. So say partner's income would continue at a lower rate in each of these insured events. If the client has other income that would continue even in the insured event, this is considered to reduce the amount of insurance required as per the methodology. So now we have our calculated cover page. So the graphs here are showing us our existing insurance, if there was any entered for the client, required insurance as calculated by the tool, and the new insurance that the needs analysis tool is recommending. So that would be, if existing cover is being retained, only the gap between the existing and the calculated is recommended. And that's what's under the new category. So you got your nice on-screen graphs here showing all the information. And then make sure you look at our disclaimers and assumptions, which explains some of the assumptions that I've explained as well, just in a document, as well as the methodology document, that it goes in a little bit more in depth in the calculations and assumptions and rates of return. I would also recommend download the report before you move on from this page, because the OmniLife Needs Analysis at this point does not save this information that you've entered into this tool. So it doesn't retain it. So download your report before you send these amounts through to the quote tool to get your premium recommendations, which we can do now. And we've got our calculated premiums based on the needs analysis options. Now you might need to adjust some of the options that have come through from the needs analysis, some of the different options or waiting periods, things like that have come through. It's also brought it through as a linked policy, which you can then adjust if you'd like to. So have a look at that and make sure you have selected all the correct options under the different cover types for your client. But yeah, we've got some premiums here that now we can look into, do reports on, make sure that they meet the needs of our client, and go from there. Hope you've enjoyed this demo of the needs analysis. If you have any questions or specific scenario questions, please email them and the report to support@omnium.com.au. We would love to look into that and respond and get back to you for the calculations and why you're seeing the results that you're seeing. We understand the needs analysis can be a bit complex in the calculations, so please send those through. We're happy to help.